Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, how would you describe the selling that took place on the major U.S. stock markets today?
Well, yeah, we've got some pretty interesting selling. The previous session, we saw strong selling in the stock market, and I was interested to see how it was going to carry over into the next trading day, which was today. And on Tuesday morning, we saw a huge wave of panic selling. The stock market sold off in overnight trading. Overseas markets were selling off technology, biotech in a big way. And when the stock markets opened, the U.S. markets at 9:30, we saw a huge wave of sell orders. I like to follow the New York Stock Exchange volume flow, and there was 16 shares being sold on the bid to every one share being bought on the ask. And the way I look at that is there's 16 people literally throwing their shares out the window, just selling them as quick as they can, and one person's out there just gobbling them up, accumulating them. And so when everybody's doing the same thing, that's usually a crowded trade. It means there's panic selling in the stock market. And usually it's an overreaction, and so usually we're going to look for some type of bounce or rally after that, and that's what we're starting to see. We're seeing the Nasdaq was down well over 2% at one point, and now it's flirting with positive territory as we speak. So it's getting bought back up as everyone kind of bails out.
In a situation like that, does that bring you new buying opportunities, or do you have to sit back and wait?
Generally, these are a good buying opportunity. It really depends on what's kind of going on within the stock market. When you look at intermarket analysis, how is the stock market performing compared to bonds, compared to gold, utilities, different things like that, and those are all defensive kind of plays. We have been seeing a shift over the last week or so where the defensive stocks have actually been, or defensive plays like gold, utilities, and bonds have actually been holding up fairly well and kind of outperforming the stock market. And that's not a good sign. So this is a really big turning point in the stock market. We've had one big bout of selling today that's kind of shaken the market up. And the big question is, can it get some traction and move forward from here? These are generally seen as a buying opportunity, but because there's more than just a wave of panic selling that typically signals a bottom, we've got these other things in effect saying, hey, listen, big money's actually still rotating out of the general stock market, and they're moving into these defensive plays expecting a further correction. So this is a really pivotal week. It's kind of a coin toss at this point which way it's going to go, but on a short-term basis, a big gap to the downside like we saw today when we're in a strong uptrend, and there's panic selling. Those are all, the recipes for a very strong intraday bounce and rally back up to more or less fill the gap that it created from yesterday's close to today's open. So we've seen that. The markets have rallied up with a big green candle. They've pretty much filled the gap, and now we need to see what's going to happen from here.
Mm-hmm. Now, when you said there was panic selling, you have kind of a little ratio that you use to decide whether this is just regular selling or panic selling. What is it?
Yeah, so generally I look at volume kind of, there's a couple different ways I look at panic selling, but typically if we see selling of a ratio of 3, which is selling volume and up volume on the New York Stock Exchange, that to me is generally a wave of panic selling, and we see the market put in a bottom, and we see a strong, a 1% bounce over the next 24 hours type thing. But today we saw that ratio of 16. So anything over 8, if the market was to close above 8 with that panic selling, that's usually a very strong signal that the market is going to put in a major bottom in the next usually 48 hours or so, and then it's going to start a new major rally. Now, we saw that spike to 16 this morning, but it has fizzled all the way back down to 2 where we are right now. So we're not seeing an all-day panic. It was just an opening bell. Everyone panicked because the stock market was lower. So it's an interesting scenario here. Overall, the markets are oversold. They've had a beautiful bounce from a rebound from the morning's lows, but we need to see where we're going to get, if we're going to get any follow-through in the next day or two, because it really is a coin toss at this point if the stock market's going to have another big drop to the downside and complete this kind of pattern, or is it putting in a bottom here? And that's the tough part, is where is this market going to go? And the markets are giving a mixed signal today, so you can't really get much insight.
Chris, are we seeing a phenomena where things happen so much faster now than they used to? Before, it would take days to find out if there was a trend and then a correction to it. Now, you see the panic buying to start with, and your phone tells you this is going on, this is going on. Sometimes the app will tell you this is what we recommend that you do to react to this. And so instead of taking days or just hours, now it's minutes and seconds.
Yeah, I think there's probably definitely a relationship between now how we can access the data very easily. I mean, you wake up in the morning and you flip your phone on and you quickly look at the futures, and it's within the first 8 seconds you're awake. You're like, oh, okay, so we're down, And so there's definitely people with quicker access. So it can create these faster moves. And it was interesting because I was talking with subscribers this morning when we were walking through the charts, talking about how there's panic selling in the stock market overnight. Well, there was strong selling. There wasn't any real panic yet. And I was telling subscribers, saying, listen, as we get closer to the opening bell, more and more people are having their morning coffee. They're on their commute. They're going to start listening to the news and hearing that the stock market is tanking today. And as we get closer to that opening bell, we're going to see the volatility index, the VIX, start to creep up because fear is creeping in, and we're going to see bigger volume. We're going to see more sellers, and we are going to see a huge wave of panic as soon as the opening bell rings. And it's exactly what we saw. You can kind of watch the emotions as the world catches on. And it's interesting because it starts very early. I mean, we start to see these type of moves, at 6:30 in the morning, where it used to be, it seemed to be a lot later. It used to be like 8 o'clock is when I'd start kind of paying attention to the markets, not, 6:30 in the morning. But, I think news, data, technology has sped things up. And of course, trading robots, when there's a big trend, the robots exacerbate everything. They just really drive prices either higher or lower to take advantage of those trends. And it definitely makes things quick.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, what do you see happening in the precious metals market with some concern in the stock market today?
Yeah, precious metals, they've been doing pretty well over the last month and a half. We've been seeing gold, silver miners trade pretty dramatically higher. They're starting to break out of a downtrend. They're starting to form a basing pattern, or about to start a basing pattern, where I think they're going to continue to move higher over the next several months. You and I talked about this a couple of weeks ago, how as the stock market continues to kind of get overextended and it needs some type of pause or pullback, we're probably going to see precious metals start to become a leading sector, more so the mining stocks, silver miners, gold miners, and that's what we've been seeing. And what's interesting is, yesterday we saw selling in the stock market, but we saw the gold miners trading higher. Today, the gold miners were under some pressure with the panic sell-off early in the morning, but they've rallied back and they are now positive on the day and up fairly nicely. So we are definitely seeing that defensive area start to become a strong sector. And if the stock market continues to keep people worried and concerned here, those defensive sectors are going to continue to do well, and we'll probably see other plays like utilities and potentially bonds creep higher. But I do like the precious metals sector the best. We have been seeing the Treasury, the 10-year yield continues to rally, so there's fear in terms of bond market, and bonds keep moving down, indicating that people just don't feel safe buying U.S. bonds, and they demand a higher interest rate. So gold seems to be the kind of best defensive play at this time, and it's in a major bull market. It's got a giant bull flag, which points to almost $800 an $800 rally from where it is right now. So there's lots of ways to look at the precious metal sector as kind of being the kind of core play here going forward.
We'll have more with Chris Vermeulen right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening in the crypto sector?
Cryptos have been under some pressure. We saw selling in the stock market, which also pulled the cryptos down yesterday. Today we're seeing the cryptos kind of start to move back up. They're moving higher, but the crypto space is struggling to get some traction here. It is on the verge of starting a new downtrend. It needs to get above 60,000, hold above that, and if it does, I think it's off to around 72, 74,000, because it is still in a major uptrend. But when we look at the daily chart, there's been some serious damage done in April, and this bounce has been very weak in terms of the crypto bounce. It's stuck under resistance, which is that $60,000 mark, and it looks as though it's ready to start a nosedive. If it starts to slide and breaks more or less, about 52,500 or so, I think it's on its way down to 40,000 mark. Potentially could unwind all the way down to 30,000. So I'm watching it. Above 60,000 is bullish. Below 52,500 somewhere in there, that is going to be pretty bearish. And of course, if it breaks below the recent low from April, around 47,500, that's when the bottom's going to fall out, and it could fall to 40 or 30,000 very quickly. So I'm on the fence of which way this is going to go. Long term, it's in an uptrend. Short term, it's pointing to lower prices. So I'm kind of waiting for either a major breakdown for an opportunity, or it needs to start to break up and get back into that short term uptrend that is in line with the underlying longer term uptrend as well. So the bias is still bullish, but you got to be aware that it could turn very quickly here.
On the crude front, the governor of Michigan wants to shut down the pipeline that brings about half the oil to Ontario and Quebec. Is that affecting prices at all?
Well, we're seeing crude oil trade up near those highs around $65, $66. So I'm sure it's helping keep prices up. But overall, the chart pattern is still playing out just like what it's pointing to, that it's going to trade sideways between around 57 and 66, and whichever way it breaks out of those, if it breaks above 66, we're heading to 78 most likely. If it breaks below 57, then we're heading down roughly around 48. So to me, it doesn't matter really in this range. Obviously, that news to me is somewhat bullish for crude. And if we do get a break to the upside, it's probably going to help send the prices higher.
Chris, anything else that we should be keeping a close eye on right now?
There's not a whole lot really other than those things. I think if we were to take a look at the utility sector, I like to follow the utility sector because it gives us some indication of what some big institutional money is doing, if they're going defensive or not. The utility sector's had a very strong run since the lows in March. They've been flagging sideways on the daily chart for about 3 or 4 weeks here. If they start to break and run higher above $68, I'm looking at the XLU ETF. If it breaks above 68, I think there's a fairly significant run to the upside. And I think that could be kind of a final warning just before the stock market rolls over. Typically, we see utilities perform very well just before stock market has a big correction. We could argue we already just saw that. I mean, we saw a big move in the utility sector ETF. It just rallied 15%, which is huge for that sector. And that's why there's a lot on the line this week for the overall stock market. It is on the verge, flipping between a buy and a sell signal today of if you should just stand aside, let the market digest things, or you could still be long. And the market really is flipping and flopping intraday here of which direction should go. So this is, to me, is a very high risk time to do anything in the market. We don't know if it's going to drop sharply or it's going to pop sharply. All the technicals are mixed. To me, you're better to let this market kind of give it a week or two, let some final surge and then a move after that clarify which direction we are in, because it's going to be a sharp move whichever way this market goes, and you don't want to be on the wrong side of it. And if it's a 50-50 coin toss, the odds really aren't in your favor.
Chris, thank you so much for chatting with us.
Hey, thanks for having me, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.